Bismillahirrahmanirrahim. It's a partnership question. T and Y are lawyers who have been in partnership for many years. The partners provided the following trial balance at 30 April 2024. T and Y revenue, salaries, rent and insurance, advertising, office expenses, interest on loan from T, premises at cost, fittings and equipment at cost, provision for depreciation, receivables, cash at bank, cash in hand, loan from T, capital accounts T, Y, capital account, current accounts of T and Y, drawings of Y, T and Y. Additional information is rates and insurance included an amount of 1920 for the year 1st March 2024 to 28 Feb. This means uh, 10 month is prepaid. 1920 multiplied by 10 upon 12, which is 1600. So this is 1600, which is your prepaid insurance. We will minus from insurance expense. Insurance is given in the question. Rates and insurance. It will be 700. Next is adjustment is salaries was due but unpaid. Salaries due but unpaid. So it will be added to the salaries. It's outstanding plus 1800 plus 1800. So this becomes 81,600. 81,600. Next is irrecoverable debt. This is expense, and we will also minus from the trade receivable if given here. Next is the depreciation charge 15% per annum using the straight line method. So the equipment's fittings and equipment cost is, how much is the cost? 70,000. So 70,000 multiplied by 15%. So the amount is 10,500. 10,500. This is the partnership agreement we will calculate at this part. Now we are starting the question. Revenue in this question is, revenue is 236,350, 236,350 less expenses. Expenses are given in the question. Salaries 81,600, and next is rates and insurance. Rates and insurance 15720. Next, advertising is advertising is 16730. Next is office expense. Office expense 6150. Next is depreciation. Depreciation equipment which was calculated 10,500, and irrecoverable debt is 670. Now we will total all these expenses, and total is 131,370, and minus, so left 104,980. It's profit from operations. It's profit from operations, then minus loan interest, is 6% on loan. And how much is loan from T is 20,000. So 20,000 multiplied by 6%, which is 1200. Then we will minus this 1200, so we get 103,780. This is profit for the year. This is profit for the year. Next part is the appropriation. Profit for the year 103,780. Then we add interest on drawings. Two partners T and Y. How much are drawings? T and Y. 34,300. Drawings are given, and the interest on drawings is 5%. Is to be calculated 5%. Then we will write in the interest on drawings 1715 and 2325. Total 4040 we will add, and we get 107,820. Then less interest on capital of T and Y, 3750 and 2550 because it is 3% of the capital balances, and this multiplied by this 3%, so we will get the interest on capital. Salary to buy is 10,000. Then we will total this and calculate the profit share. 3750 plus 2550 plus 10,000, 16,300, 16,300 we will minus, and this is the 107,820. So profit share will be 91,520 M shared by partner T and Y. Their profit sharing ratio is also mentioned, 60% and 40%. 60% T, 40% Y. 91,520, 91,520 multiplied by 60% multiplied by 40%. 91,520 multiplied by 60% is 54912, 54912, and 91,520 multiplied by 40% is 36608. 36608. The total will be 91,520. Hope you have understood this part.